IT stocks trade with cuts after the U.S. Department of Homeland Security proposes to change the H-1B visa selection process. Tech Mahindra, Coforge, Persistent, they're all under pressure.
Shares of Swiggy trade under pressure after the company said its board of directors approved divesting an entire 11.8% stake in cab aggregator Rapido for nearly 2,500 crores.
Shares of Mahindra Corp surged as much as 8% after the company unveiled its Vision 2030 roadmap, projecting its revenue to more than triple by 2030.
Bajaj Electrical zooms in trade after the company clears proposal to acquire the brand rights and intellectual property for Murphy Richards for a sum of 146 crores.
Sri Lotus Developers gains in trade as Motilal Oswal initiates coverage with a buy rating with a target price of 250 rupees per share. Brokerage says the company has established itself as a key player in the society redevelopment space. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today is Ekta Batra. Well, Ekta, market is a little bit under pressure. We're off the lows as well. Par for the course, one would say.
Hi, Nigel. Yes, another day, you'd have to say, of, mild profit booking because there has been a recovery from the day's low for the Nifty. So currently just about around 25,100. So we seem to be holding those levels at this point in time. For the Bank Nifty, showing a little more pressure, so down around 0.4% for the Bank Nifty at this point in time. But we do have a lot to get through in the next 30-odd minutes. So let's kick off the show with Chandan Taparia from Motilal Oswal Financial Services. He joins in for a technical check on the markets. Chandan, hi, welcome to the show. Well, it's turning out to be a day where the Nifty is just about trying to hold 25,100. What's your sense in terms of a technical call today?
Yeah, good morning, Ekta and Nigel. Thanks for having me. So Nifty continues losing a streak for fourth consecutive trading session and corrected by around 400 points from its recent swing high of 25,448. The good part is that major trend of the market is positive to range bound, but intraday is likely to see some sort of profit booking at higher levels. The good part is that 25,000 could act as a major support. So I believe the ongoing decline might arrest or may attract the buying interest near 25,000. In that scenario, it can see a bounce towards 25,250 to 25,350 levels. Talking about selective stock specific, positive on the Nifty PSU banks, or in fact, the entire CPS index looks good. PSU index has rallied well by more than 12% in this month. And most of the stocks are showing sign of this trend. So first trade will be buy on Canara Bank. This stock has been making high top, high bottom on the daily chart, really well, given a major consolidation breakout on the weekly, monthly, and the quarterly chart. So we are recommending to buy on Canara Bank with a stop loss of 121, and it can head towards 130 level. Second trading area, there is buy on NTPC. After a long time, this stock has given a consolidation breakout, and this breakout is happening after the consolidation of last almost 17 weeks. It managed to surpass the multiple hurdle of 344, and now the long build-up is being built with the put writing activity. So stock has potential to see the next leg of rally. One can buy with support of 340, and this power counter has potential to rally towards 362 kind of level. Last trading area, there is buy on AB Capital, one of the strongest counter, which is holding near its recent lifetime high. Major trend is positive, and every small decline is being bought. It is also holding well above its rising support trend line. So expecting next leg or rally in the counter. One can buy with support of 290, and this stock can head towards 310 kind of levels.
Okay, all right. Got that. Thanks a lot for that, Chandan. Well, let's go to our special segment. We get a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that he's tracking closely. Sachin?
Container Corporation of India, or CONCOR, which is the largest container freight operator in the country, delivered a muted financial performance in the first quarter of FY26 with a revenue growth of just 3% year-on-year. Well, the stock of the company has also underperformed in recent months, primarily due to announcement of tariffs by the US government on Indian exports. Well, given that CONCOR has a significant exposure to the export-import overall trade basket, the company is likely to have a potential impact in the next 1 to 2 quarters. However, we expect these trade issues to get resolved in a few months, which should pave the way for volume recovery in the next fiscal year. On the domestic front, the company continues to remain on a very strong footing and is looking forward to initiate the transportation of bulk cement through containers. The company is also looking forward to add new last mile services as well as has entered into shipping arrangements with new partners to be able to grow the business volumes. Well, the trade issues have had a negative impact on the company, and the stock price has also taken cognizance of those factors. Nonetheless, the company has an aggressive expansion plan, is aspiring to reach around 70,000 containers by FY28, along with 100 terminals. Overall, company continues to remain on a very solid footing and is trading at around close to 28 times 1 year forward earnings, which we believe is reasonable for accumulation from a long-term standpoint.
Okay, all right. On that note, we're going to take a short break. But up next, stay tuned because we have the team of ePack Prefab Tech. They are heading to the primary markets. We'll be discussing their IPO on the other side. Stay tuned.
Well, the IPO market has been very, very vibrant, and we have a new IPO on the block. That's ePack Prefab Tech IPO that's opening up for subscription today. To help us out with details on the company and the vision ahead, we have Mr. Sanjay Singhania, the MD and CEO of the company. Mr. Singhania, thanks a lot for joining in. Well, before we come to you, just wanted to highlight the broad points we're going to be focusing on. Point number 1, utilization of IPO proceeds. Point number 2, the capital expenditure in manufacturing facilities. Point number 3, business. How will it shape up on the whole? So those are the top talking points. Well, Mr. Singhania, thanks a lot for joining in, sir. I'm looking at the money that you're raising for the company that will be used for 2 purposes. One is debt repayment, I think to the tune of close to around 70 crores. So could you tell us what does the net debt come down to post the 70 crore repayment? And also, you're going to be using part of the proceeds to expand capacity. So what is the asset turnover that you see on this investment of 150-200 crores?
Yeah, great. So thank you so much for having me on the call. Good morning. And the proceeds of the IPO will be used in 3 buckets. So as you rightly said, 70 crores is going towards debt repayment. The net debt position of the company as of now is 53 crores only. And post IPO, post repayment, the debt equity will be rather negative for the company. So that is in a very good situation for us. As far as the other bucket is concerned, the company is putting around 160 crores in capex. That is on 2 plants. First of all, we are doing a capex of 60 crores in a brownfield expansion in our Mumbaku, Andhra Pradesh plant. There we are ramping up our structural steel fabrication facility by 36,000 tons, and post IPO proceeds utilization, and the structural steel fabrication facility will have around 170,000 tons of capacity. And the other manufacturing unit that is coming up, it's a greenfield project coming up in Gilor, Rajasthan. There we are investing around 100 crores, and that is for insulated sandwich panels. So these sandwich panels are the new age building material. These are the insulated sandwich panels, drywall sandwich panels, which are used for various applications like the clean rooms and cold chain and building facade. So with a lot of new age, like construction and building and factories coming up in renewable, semiconductor, so they will all utilize this kind of insulated sandwich panels.
Okay, just one question, sir. Just to confirm what you said, post this debt repayment of 70 crores, you'll become debt-free. Is that correct?
Net debt-free.
Got it. You'll become net debt-free. And point number 2, the 160 crores that you're going to be putting up on the 2 plants, what is the revenue you can get? Asset turnover, what could it be?
So our asset turn as on date is around 4.5 for the prefab business, and which has a potential to go up to 6.5 to 7. So we believe that post this investment of 160 crores, we should be able to do somewhere in the range of 800 to 1,000 crores revenue.
All right, Mr. Singhania, I just wanted to get one particular issue out of the way. There are certain issues which have been brought up in your RHP with regards to non-compliance of regulations raised by the UP Pollution Board. Where does that particular issue stand right now? And is it impacting business at all?
Yeah, it was an issue about 2 years back. So thereafter, we have changed the technology of our boiler that was related to the packaging vertical which we have in this company. So now it has been sorted out. We use biofuel in our boilers now. Yeah.
Okay. The other thing is that if you could just highlight what your pending order book is. We understand that it was around 900 odd crores. If you could break it up for us in terms of, where exactly the order book stands at this point in time, the execution timeline, and what the pipeline of orders might be looking like for you all, to the best of your ability.
Yeah. So the order book as on 1st of April 25 for us was around 910 crores, and order book to revenue ratio for us has been 1.5. So it means, if we have a opening order book of 900 crores or 910 crores, then we can typically do a business of say 1350 to 1370 crores. And this year, in particular, the last 6 months has been very good for us. We have been getting some great orders, especially from renewable energy and FMCG. So the future also looks equally promising. And the best part about prefab has been that we have grown 5 to 6 times on the industry in the last 4 years. So while the industry grew by 8 to 10%, we have been able to grow the prefab business by almost 55%. So I think with the current order book and the way we are booking the orders right now, the momentum is going to continue for the next few quarters as well.
Okay, exports are very small. They're actually zilch as a percentage of your revenues, 0.2%. But you're saying there's a potential over there. Target out here, where does the export number head to?
Yes, you're right. The exports for us is minuscule at this moment. For this, overall the exports from India for the prefab is growing little slowly, as at this time the markets mainly are in the GCC and the South nations. We have put up a facility in Andhra Pradesh last year, just it's around 45 kilometers from the ports. So that gives us an advantage in terms of logistics and the ability to export. Prior to that, both the plants were in North India. So there was a logistics issue. We are working on exports, but at this time for us, thankfully the domestic tailwinds are so strong that even if we are able to focus on domestic market, then still we can grow at a very considerable pace.
You did mention very strong growth in your prefab business. Just wanted to understand these kind of growth rates, even for example, what you've seen since FY23, an EBITDA of around 51% CAGR. Is this sustainable? What can you guide on in terms of, say, a sustainable growth rate on a longer term perspective for the company?
See, there are huge tailwinds at this moment in our industry because of various, government schemes, the PLI on the factory side, the national logistics policy on the warehousing side, and acceptance of high-rise buildings, which are replacing the traditional conventional building construction. So, because of all these factors, there are huge tailwinds. Yeah, as per our understanding, our industry is growing at this time by about 15%, and we will definitely build this, growth of the industry will do much better than the industry in the coming period as well.
Just one factor, sir. There have been various issues in the past with the UP Pollution Board and various other factors. Any risk to the business? All these, is the company dealing with any sort of issues that you'll have had in the past with regard to this, or any regulatory issues so your investors don't need to be worried about?
See, this pollution issue which you're talking about is related to the packaging division. The packaging division contributes less than 15% of the revenue for the company last year, and it will be further less because of the rapid growth in the prefab division which we have. And this issue is the past. It is no longer there. We have got all the clearances, and we have changed the fuel, so it is no longer a concern for us here.
Okay. All right, Mr. Singhania, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's EPAC. They've raised around 150 crores from anchor investors, in fact. And let's see, it's in the prefab segment. Not much in terms of exports at this point in time. 70 crores of the funds which are going to be raised will be used for debt repayment. The total size of that is around 504 crores in terms of the IPO. We'll take a short break, but we'll be back with a lot more stocks in focus. Stay tuned. Welcome back. Well, definitely a weak day for the markets. We have the mid-cap index, which is trending a bit lower now, so down around almost 0.5% as we speak, and an advanced decline ratio, which is on the weaker side. We just want to point out one particular stock within the Nifty space, which is Sun Pharma, which is managing to hold its head above the water. Now, Motilal Oswal has come out with a note on Sun Pharma with a buy and a target price of 1960 odd rupees. And a couple of takeaways from the management meet include that their specialty growth will be a key, will be a key growth driver for Sun Pharma going forward. And the US FDA regulatory issues at Halol are currently being addressed. They maintain their FY26 revenue growth guidance of mid to high single digits. Earnings are expected, according to Motilal, to grow at around 14% CAGR. So that's on Sun Pharma, just about holding at around 1633 odd rupees. We do have Sudarshan now with us. He's joining in to talk about Minda Corp, which is in focus. That stock is buzzing on the upside today. Sudarshan, tell us more.
So Minda Corp has yesterday released vision document for 2030, setting some of the ambitious target. And on revenue front, it sees revenue increasing by almost 4 times by 2030 to rupees 17,500 crore from current level of rupees 5,100 crore. It believes that margin too may increase to 12.4%. That would be an increase of almost 100 basis points. On net debt to equity ratio, it believes that it might decline to 0.3 times from the current level of 0.6 times. And on ROCE front, it might increase to 25% from current level of 20%. Apart from these targets, company has talked about the contribution, and it says that contribution from passenger vehicles will increase significantly to 25% from current level of 14%. And in contrary, contribution from passenger vehicles, commercial vehicles, two-wheelers and three-wheelers will be coming down going forward. Some of the growth drivers also it has talked about. First one is that company will focus on premiumization. Kit value is going to increase and it might double in next 3 years, that is by FY28. On an exports front, it's targeting CAGR of 37% from the current level of 18%, or say 18% that company achieved between FY21 to 25. So these are some of the growth drivers apart from the targets that company has mentioned. On the back of these, stock is higher, currently 8%.
Okay, all right, sir. Thanks a lot for giving us that input. Well, let's focus then on the India-US trade ties. And speaking at the US-India Strategic Partnership Forum, Commerce Minister Piyush Goyal spoke on increasing energy imports to the US and unlocking limitless possibilities with the US on various fronts beyond energy. Let's listen in.
The world recognizes that this is one area where we all have to work together. India is a big player in the energy field, as Pankaj just mentioned. We are big importers of energy from across the world, including from the US. We expect to increase our trade with the US on the energy products in the years to come. And be close friends, natural partners. Our energy security goals will have a very high element of US involvement, which will ensure price stability, which will ensure diversified sources of energy for India, and help us unlock limitless possibilities with the US on various fronts, energy and beyond.
All right, that's the Commerce Minister. But on that note, we need to wrap up on Chartbusters. Stay tuned. Trading Hour will be up next.